And our first guest today says while there are plenty of risks ahead for markets, U.S. exceptionalism remains well intact. Timothy Chubb, Girard Advisory Services Executive Vice President and Chief Investment Officer. Tim, it's good to see you. So let's start right there, Tim. You say, of course, plenty of uncertainty, but U.S. exceptionalism, that's the story, that's intact. What do you mean by that, Tim, exactly? What do you mean by that? What does it mean for investors?
Yeah, absolutely. And thanks for having me. I really, one of the key themes to our outlook was that U.S. exceptionalism, and ultimately growth in the United States is expected to be quite a bit higher than the rest of the global economy. Despite what's going on and some of the uncertainty with tariffs and some of the other geopolitical risk out there, ultimately, taking that aside, the European economy is struggling. The Chinese economy is struggling. They're not able to innovate in Europe. There's lots of, long-term structural related issues within China related to debt as well as demographics. And ultimately, I think it's going to kind of go back to the post-global financial crisis, ZIRP area of, the U.S. being the cleanest shirt in a pile of dirty laundry for growth. And as you just, let in, AI is a big part of that story. And so ultimately, helping fuel growth, not just for profits of the S&P 500, for the broader economy as we start to get some of those productivity gains really starting to filter in some of the economic data.
So, Tim, where do you go then to benefit, from this growth that we could continue to see? Do you go to places like, this AI infrastructure play, for example?
Most definitely. We're really in the early innings of that. We talk about it a lot in the context of a baseball game. I remember, years of where are we at in cloud? We're still in the very early innings of AI adoption. And in fact, I think 2025, may be a really key year for more enterprise adoption. As we saw ChatGPT get released, users, were largely consumers, and to the extent that we'll see more and more companies incorporate generative AI into their business, I think is really a critical year. And that goes beyond just the hyperscalers. It's ultimately how businesses can look to find some efficiencies, and taking some of the data that they may have in a core system, say like Salesforce, and ultimately getting some new insights from that. And so I do think that we're going to start to see some of the ROI from some of these AI investments start to materialize in the back half of this year. And that has us really focused on a variety of areas, from the hyperscalers and the Mag 7, which we very much like, but even more broadly in a company like Synopsys on the design side, as well as the infrastructure, companies on the industrial side of things like an MCore, which ultimately need to helpful to enable some of that infrastructure to build out.
I want to touch on a point you just made there, Tim, because listen, with this Stargate AI project, you can obviously understand the excitement. I mean, it is big headlines, it's big personalities, it's a ton of money. I mean, $500 billion being floated out there. And you can see investors today, Tim, they're placing their bets, Microsoft higher, Oracle's higher, they're bidding up Nvidia. What's interesting though, Tim, is the point you just made is it wasn't so long ago, I felt like we were also having this conversation, Tim, of investors maybe increasingly maybe not feeling cautious, but certainly having questions about all this AI spend. Spend. Where is the return?
Yeah.
Have we moved past that?
I think so in a lot of ways. Certainly the hyperscaler spend really came out of nowhere, right? I mean, 200, 300, the numbers continue to grow, and it really seems that that spend is durable. I mean, we're talking about companies with rock solid balance sheets with an abundant amount of free cash flow that really don't want to be left behind in this new generation. And so I think what we're seeing is the spend is durable because it's a lot of incumbents within the technology sector that are really well positioned to continue building on their existing ecosystem. And a perfect example of that and sort of the timeline from an ROI standpoint, I think is Meta. Ultimately, AI and some of the tools that they would be able to incorporate to ultimately enhance their ad impressions and likely, the spend, especially in the context of what's going on with TikTok, really has us excited. And so, I do think the spend is durable. We'll broaden out a bit later in the year, and perhaps Nvidia has less customer concentration than they do right now. I'm not so sure that'll be the case, but ultimately I think we're still very much in the early innings, and I think you can look more broadly to the AI story as we saw last quarter with Broadcom, for example, on the custom side of things, to continue propelling this bull market forward.
Tim, when we talk about the AI play, when we talk about the Magnificent Seven, I know there is one exception that you guys are not as interested in. That is Tesla. Why not?
Yeah, with Tesla, it's gosh, I probably could sit here for hours and talk about it. Unfortunately, we still have a car company, and a car company with a lot of promises and operating margins close to 10%. And I know there's a lot of excitement about autonomous, but going back to the capital that you just discussed related to the whole AI build out, where does the capital come from to build a fleet of 60, $70,000 dollar Teslas out there driving everybody around? Not to mention, Waymo is so much further along with their ambitions related to autonomous driving. And so one of our favorite picks for this year is Uber for that reason. It sold off towards the end of last year. Ultimately, there's a bit of normalization taking place within earnings. But ultimately, net income is expected to grow quite a bit in the next couple of years after so long the company competing with, Lyft, for example, and trying to gain market share. It now is the dominant player. They have economies of scale. And I think, those partnerships with Waymo and Tesla and others on the AI front really put Uber in a really strong position to continue to really take the autonomous vehicle, sort of narrative to real life and application as we will likely see later in this decade.
Tim, just on Tesla, one quick question was, we had folks come on the show, Tim, and at least part of their bullishness was the fact that Musk had become so close to Trump, right? I mean, and you've seen these recent reports. Musk might be getting his own West Wing office. So I'm just curious. Obviously, you can't model a relationship, but the fact that Musk is that close now to the president of the United States, does that give you pause on Tesla?
It doesn't. We saw this with the prior, when Trump was in office previously, the cabinet comes and goes. And, to me, that's not a good enough of an investment thesis. And I realize, and hope that Elon's, efforts within Department, of Efficiency ultimately are successful in starting to bring down our fiscal deficit. But I'm skeptical he's going to be successful in some of those efforts. And I'm also skeptical that, he'll be around this time next year, having the influence that he may on the administration. So at the end of the day, it's not necessarily a huge, we don't like it for a lot of fundamental reasons, but, we're long-term investors, and that's not a durable enough investment thesis for us to be interested in a car company.
Yeah, and to your point, today he was out there sort of throwing some shade on this Stargate announcement. So we'll see what happens. Tim, always great to see you. Thanks very much.
Thank you.